Welcome back, everybody, to DeFIRE AMA for Thursday, May the 19th. It's been a busy week of building and planning, and there's been a lot of positive developments in the DeFi space despite the market downside. I wanted to discuss some of the potential um, signs of some important areas of growth for DeFi coming up in the next year. But first, let's go through what all happened in the last week. So there was a lot of building and planning that happened behind the scenes with the team. The Blaze user interface is being designed; it's well underway. Um, got a chance to see what Pro Harvester has been working on so as far as the visuals on the display for Blaze DApp. Um, the team has been meeting with the design team for the final steps on the landing page for DeFire. That's all going really well. Really happy with what the design team has been uh, coming up with for the landing page. We've been meeting with people in the engineering team. There's ongoing work on the back end and front end of Blaze. Um, there's been some folks that have been sick or just had extenuating circumstances. So wishing everybody a full recovery or to just feel better soon. Um, the content team is working on the white paper docs for Blaze. Our Git book is in full production mode now. We have some stuff that's already been written, but we are in the process of refining and simplifying the descriptions for the containers and writing an introduction for people new to DeFi. Just going through the process of making sure that we have a really well written and well thought out, easy to understand, um, very thorough Git book for the Blaze app. Um, let's see. So we're working on thinking about protocol fees. So now that we know kind of what containers are going to have for the MVP, um, been doing a little bit of work on trying to project revenues, thinking about profitability and runway for the project. Um, and that's been based off of just the available APRs that will be associated with the different containers and the TVL of the correlated assets, just generally in DeFi, and how that will correlate to the likely weighting of different investments in different containers and how that will play off, uh, how those things will play off of each other in determining our revenue streams to begin with. And some of that has to do with thinking about what kind of associated fees are going to happen on different containers, the potential liquidity of different assets, gas fees, trading fees. Trying to think about all of those things and plan for them ahead of time. So that's been an important step. Um, and by the time we get to launching MVP, we should have a really good handle on those numbers and be very confident in our ability to execute on that plan. Um, that also kind of brings up the idea of what strategies will be helpful in the current market conditions. Obviously, some containers don't work as well in a bear market as others without having some sort of correlated counterparty risk, which is associated with the strategy. So, if you're holding just an index of different tokens that represent your um, exposure across crypto, unless you're actively trading, then uh, you're going to have exposure to the upside risk and the downside risk. And part of what we've been working on with these containers that will be launched with the MVP is that there's stop loss functions involved, and so you're more exposed to the alpha of any particular asset than you are um, to the beta. So beta would be like the correlation between the opportunity for appreciating um, value in correlation with the market, as opposed to alpha being, kind of beating the market expectations. So when you're farming and you are exposed to these high APRs, you're still basically correlated to the swings with the market, and unless you're actively trading and trading in and out of your position, you're not going to capture all of that alpha. And so I've sort of been playing around with the idea of calling some of these containers a hybrid alpha container, because you're in a strategy that's risk on, and then there's a stop loss function, so that when there's a market downturn, the assets get sold out of that strategy and redeployed into a safe haven strategy. So you do have access exposure to the upside, um, and quickly trade out of it before you lose all of your initial um, um gains on that high APR, or just on additional interest outside of the assets um, general trending upwards. Um, so we've done some AMAs in the past that have sort of diagrammed out what that all looks like, and we'll do that again in the future. But the idea is just that we're going to be trying to um, provide the best return on investment for the market, and so these containers will provide a level of return that really no other um, protocol is offering in the market at the moment. Um, and there's also additional strategies that um, will be deployed in the future that will provide the kind of well-rounded market exposure that you'd want to have in the long term for a portfolio. So, say you want to have more of an index style container that gives you broad exposure to the market, there'll be those as well. And those containers on their own won't necessarily have a risk off function, at least not at this point. But we may also offer a correlating container that is a counterparty risk kind of container, where you're um, being exposed to options trading, where you're um, basically trying to beat the market returns by making out of the money options calls. And if you're not familiar with that idea, I think we'll probably have to put together an article soon, or at least a link to an article that, because there's a lot of really good material out there that talks about options trading or delta neutral strategies. So you're hedging your risks. Basically, it's just a hedge against the market. So in the future, when we get to the full release of the Blaze protocol, we'll have a lot of additional styles of containers available, and that's all part of the process that we're working through right now with our white paper. Is just our Git books documents is just to be really thorough and explain to everybody the difference between these containers and how they can be useful in different situations. But we'll just be offering containers that are generally profitable and safe to use in a bear market. So any container will be um, easily used to have upside exposure in the current market conditions. Let's see. So, I also wanted to talk a little bit about things that have been developing that are positive outside of just the price of assets, or the rise or fall of the market right now. And that's basically news that different blockchains or different companies have been releasing. So first of all, the more recent thing was that yesterday, Robinhood, the trading app, it's centralized actually, so it's an app. But Robinhood has come out with plans to offer a non-custodial crypto wallet that will allow people to invest in DeFi and to connect to different DeFi apps, um, And also the same day, Coinbase also released a update that says that they will also be creating a non-custodial crypto wallet. Now, Coinbase did say that people will be able to have access to some of the Ethereum dApps, but it will be from Coinbase without having to leave the site, is what I understand. It's not like MetaMask where you can just travel to another blockchain and invest outside of the Coinbase ecosystem. So I'm not sure if Robinhood will do that, but that will be a limitation. But even if the limitation is there, it still gives uh, exposure to DeFi to millions and millions of new customers. Um, and some of these people may have already been in crypto on those centralized apps, but have never really dipped a toe into DeFi. So it's a win situation, regardless of whether you know you like Coinbase or you like Robinhood for yourself. I think just in terms of exposing people and creating more word of mouth for DeFi, it's going to be a huge deal. And then two other things happened earlier in the week in terms of news that will probably massively, exponentially increase adoption for DeFi. And one of those is that Stripe payments will allow crypto payments through Twitter, and that will be synchronized with Ethereum and Polygon. So Polygon will, probably really benefit from that, being the transaction layer that has the cheaper gas fees. Um, but again, it will just have a huge effect on the amount of eyes that are gaining attention to DeFi. And then the other thing that happened the next day was that Meta, the company for Facebook and Instagram, announced that they are going to integrate NFTs into with Polygon, Ethereum, and Solana, I believe. But the main partner, from what I understand, will be Polygon. And so the founders of Polygon did a podcast with Bankless that I got to listen to, and so basically, Polygon has developed a number of different. Hey, Ansgar, I'm just doing a little recording real quick, and I was just talking about some things that happened this week. So Polygon has a couple of different side chain layers that they're developing, and there's one called Hermes. And so they announced that Meta is going to be using that layer to integrate NFT usability on Instagram. And so for the next year, from what they were saying, basically people will be able to buy NFTs through on Polygon and then display them on Instagram. But the next step will actually be that people will be able to eventually mint NFTs on Instagram from the dApp. So, that's a real, I mean, that's a really centralized Web 2 kind of integration with DeFi. But nonetheless, regardless of whether other DeFi protocols would want to, you know, partner with a centralized um, company like Meta that has really kind of been very guilty of mining people's personal data, and nonetheless, it becomes an on ramp to DeFi, and that's like over 2 billion users for Instagram. So it is likely to just like massively increase people's exposure to Polygon for sure, but then also to just all of DeFi. And so I think it's a huge thing that um, even if you're creating NFTs in any way, and just to use that as a form of connecting with new users, to just be able to use that to bring people who are curious about crypto onto Polygon or even to our protocol and then be able to introduce people to DeFi. I think there's like huge, huge opportunity there. Um, so I think that that's probably happening on other chains as well, but I don't know about it. And so one of the things I want to ask people, if they listen to the recording, please come into the Discord and leave your thoughts in the comments channel, or the questions channel, I mean, and leave a comment or question about what you think in terms of which of the chains that are most popular for DeFi will likely be best positioned in the next bull run to capture new DeFi users. Um, because it's likely that there's probably some of that for Avalanche too. Um, and there's a question about Phantom. Obviously, Phantom had a really big run up this year, and so they're having some issues right now. But they also have some upside opportunity there, just depending on Harry Ye's success in converting Tomb to be more of a base layer token that's not as volatile. Like if they can move away from the Tomb T-share connection and make Tomb just the gas token for Felix exchange and for Tomb Swap, if they can navigate that properly, then there's no reason Phantom couldn't also be in that conversation. So I'm just curious where people's minds are in terms of which chain is most likely to be the best chain um, to pick up those new users. And so basically, between the news about Coinbase and Robinhood creating non-custodial wallets where people um, can visit DeFi applications and start dabbling in DeFi, and the fact that Stripe and Meta are going to be integrating with Polygon, I see there being a lot of upside for Polygon. Like that's real obvious. But that was all kind of done behind the scenes. And for the last 6 months, I think Polygon's really taken a hit in popularity. And I think maybe the team has kind of just allowed that to happen at the blockchain foundation, and maybe they're going to reap the benefits of just focusing on building. So maybe the same thing's happening with Avalanche and Phantom right now. Like Avalanche has a lot of popularity in their protocols, but in terms of like things that are happening on a blockchain layer, I haven't really heard a lot in terms of, other than that people are just really happy with the quality of the developers and of the tech. So if anybody has any alpha on that, that'd be interesting to know, because we're still, open um, to any of those chains as our home chain for where we would have our governance token and our voting and everything. Even though, like we initially said, Polygon, it's still up until we have to make a decision. It's still something that we can take input from the community. So, um, yeah, that the one thing that I can say in terms of what I noticed on Avalanche is that after the implosion of Terra Luna last week, I've been doing a lot of research on where good stablecoin returns can be found, and I noticed that on Avalanche, especially on the other chains as well, but especially in Avalanche, the APRs for stablecoins has gone way down. And then I was looking at the TVLs for some of these pools that are really popular for Trader Joe and Platypus and YieldYak and some of the bigger protocols in Avalanche. And the TVLs on some of these stablecoin pools have just like gone parabolic. Like some of them have gone from 10 million to 100 million in liquidity on those pools. And so I think that a lot of people that were holding UST that sold out of it have resettled their funds into USDT and USDC and DAI on Ethereum, Phantom, Avalanche, and Polygon, um, which is good in terms of, it's good for those blockchains for individual users and for protocols. Like for me, just trying to find good stablecoin strategies for Blaze. It's like, well, that brings some of these really good deals on returns from 14% down to like 8%. So you know it is what it is. But yeah, so I think that that's probably an indicator that a lot of people transferred um, from UST from UST to other stables, and because Anchor Protocol was on both Terra and on Avalanche, I think that a lot of that liquidity flowed into Avalanche. So if those people now become familiar with Avalanche ecosystem, then that could be a really big deal for Avalanche going into the next bull market. Um, so yeah, uh, if you're listening, please drop your bullish case for any one of the blockchains that we'll be working on um, in the questions channel or in the general chat. So I'd really like to continue that discussion. There's a lot of interesting things going on. I think that we can't really lose in the fact that we're going to be multi-chain. So no matter whether we have our governance token on one chain or another, people are still going to be trading into the Blaze containers on all of those blockchains. So there's not a bad scenario, but there's better cases that can be argued one to the next, and more in terms of the long term outlook for where we should be. Um, yeah, so that's kind of what I wanted to talk about today. Um, and So, it's pretty straightforward right now. A lot of the building that we're doing on the back end isn't real glamorous. It's hard to like create new updates about things because there's, things that have to do with the technical details that we don't necessarily want to make public yet. But, in terms of the building the UI front end for Blaze, that's coming along really nicely. Um, um, we've basically come up with a concept that mirrors what the Owls design firm did for the landing page, so that Blaze will not look exactly the same, but it'll definitely look like related. Um, and I think it'll look distinctive. It won't look exactly like an aggregator or a yield farm in terms of the boxes and how everything's coordinated. So I'm excited. I think people will like that, and we'll definitely be releasing a previews of that and getting feedback for what people would like to see when it's like closer to being a fully polished product. Right now, there's just a lot of work to do on the details with the team and Pro Harvester, who's the dev who's working on the front end UI UX stuff. Um, and then on the back end, there's not been as much done on the back end because we have been in still in consultation with Tin Clouds to try and get them going on different aspects of the contract development. So there's been some work done just to begin working on the control tower and the central part of the functionality of the back end, but there's still quite a bit to be done. Um, we're making progress. It's just hard to say much to it because I can't create a diagram to put here on the screen at the moment. There's you know there are certain things that can be said at this point, and there's things that we'd rather not put out into the public yet. Um, and then yeah, the rest of the stuff is also fairly mundane in terms of like creating spreadsheets for cash flows and thinking about overhead and profitability, what the proper fees and rates will be for different containers, um, how to add additional incentives for providing liquidity for the DeFIRE token. Been looking at different ways of bootstrapping liquidity. In addition to just growing TVL for the containers, we want to continue to think about how we can grow liquidity for the token, how we can eventually grow more protocol owned liquidity so that we have that stability. And there's a couple of different methods that are out there. There's a couple of new integrations that have happened for Bancor and for another DAO on the Polygon network called Olive DAO, and they kind of offer liquidity as a service. but in a new way that is single-sided liquidity with no permanent loss. So if you haven't looked at Bancor's new Bancor 3 service, that's an interesting one. And then all of DAO, they basically have the same functionality. The protocol themselves, the DAO, can provide their native token into a vault, and then the community members or other people that just are using the protocol can provide liquidity to those vaults. And then the DAO would get some of all of DAO's native token in exchange for depositing that liquidity, and then they could direct those tokens to different exchanges or dexes, AMA or AMMs or wherever they want to send them. The other way of bootstrapping liquidity has been around for a while, and I've noticed a lot of protocols on different chains that have used it, which is the Olympus Pro bonding program. And there's a lot of customization that's available, so you can determine how much liquidity that you want to put out ahead of time. You can determine the bonding rate and what the discount would be, and you can um, the bond can run out at a set date or a set time. Um, so that would be a way of bootstrapping liquidity as well. Um, and you can start it, stop it, and then do it again later. So that's really attractive because it doesn't require as much of a long-term relationship with another protocol. So things we've been thinking about, not super sexy, but stuff that is important for the health of the protocol. Still thinking about security and making sure that we go through all of our processes and testing and everything. So um, even though there's not as much being put out in terms of content right now, rest assured that there's a lot being done. Um, and so that's about all that I really have in terms of updates for right now. And so I'm just going to hang out here for a minute and I'll keep talking, but I'm going to sign out for this week. Thanks for listening, and I hope everybody has a great week.